Hello and welcome, everyone. Thank you for joining us today for this very important and insightful session on understanding key loan terms, including interest rates, moratorium period, and repayment, which are absolutely crucial when you're planning your education abroad. We know that navigating the education loan process can feel overwhelming, especially with so many financial terms and conditions involved. But don't worry, that's exactly what we are here for today. By the end of this session, our goal is to help you feel more confident and informed about how your student loan actually works and what to look out for while evaluating your loan offers. Before we dive into what Lorien Finance does and into the topic that we are here to discuss today, I would like to welcome our speaker for the day. Welcome Komal, with a postgraduate degree in banking and finance and over 10 years of experience in the education loan industry. Komal is an expert admissions assistant with a passion for helping students reach their target universities along with the best education loan options. And she also holds a rich experience in the digital media industry in the sales and partnerships vertical. Thank you for taking out the time for us and our students today, Komal.
Thank you. Thank you for inviting me.
Right. So, before we dive into the main session, let me take a moment to introduce ourselves. Lorien Finance is a specialized loan advisory platform built exclusively for students going abroad. We partner with top public and private banks, NBFCs, and international lenders to help students secure the most suitable education loan for their profile with zero processing fee, faster approvals, and end to end support. What makes us different is that we don't just connect you to a lender, we work with you through the entire journey from shortlisting the right loan options, comparing interest rates, understanding co applicant requirements, collateral requirements, to finally helping you with documentation and dispersal. And if you haven't already heard, we are currently running our biggest campaign of the year, Lorien's Loan Fest. As part of the Loan Fest, we have brought together exclusive offers and rewards and priority processing with our partner lenders, all designed to help you fund your overseas education more easily and affordably. So, if you're planning to take a loan soon, LoanFest is the perfect opportunity to make the most of your financing journey with additional perks and support. I'll quickly tell you about all the rewards Lorien Finance is offering. So, every week we choose a lucky winner of all the students who have applied for a loan with Lorien Finance, and the lucky winner receives a 20,000 rupees worth travel kit and goodies. One lucky winner every month receives an iPhone. One lucky winner out of the 3 months in which the students apply for a loan with Lorien Finance gets a chance to win a MacBook. And with every loan dispersal, every student surely gets a 2,000 worth rewards. So there's a lot of rewards designed for every student who wants to apply for a loan with Lorien Finance. So with that, let's get started. Today's session is going to be crisp, interactive, and full of practical takeaways. So feel free to drop your questions in the chat as we go along. We'll of course also keep time for question and answers at the end as well. So let's begin by breaking down what interest rates actually mean and how they affect your total loan cost. So, Komal, if you could just help our students and our audiences understand the same.
Well, and about my thing has been told by the team. Thank you so much for inviting me here. Okay, so talking about the education loan, definitely education loan for each and every student who is planning for the education loan in India, planning for the higher education overseas plays a very crucial role. So while choosing for an education loan, it is very important for the student to be very much aware about the loans, the terms and conditions about the education loan market, whichever is going around in the current scenario. So to understand this in a better way, I'm going to guide you on certain things which will be probably helpful for you for choosing your education loan requirement. Okay, so what is education loan? Education loan basically is a way of finance which the student can get through multiple options which are right now available in the market. It can be an NBFC, it can be a public sector bank, it can be a private sector bank. Education loan definitely is a type of financial assistance which students nowadays require, definitely because of owing to the cost of education which they need if either they are studying in India or either they are studying overseas. So financial part definitely plays a very crucial role in it. In education loan, there are multiple factors, multiple things on which the eligibility of a student depends. That maybe the course is planning for, whether it's going for postgraduate, whether he's go for undergraduate, whether he's going for a professional course, varies case to case. Along with the course, the very important thing which a student take into consideration is the cost of education for the higher education. So how much is the total cost of education, which may definitely include their tuition fees, their living expenses, their traveling expenses, and the other miscellaneous charges. Okay, so in all the scenario, definitely they probably go ahead and take an education loan. In education loan, the most and the very important factor which the student take into consideration is the ROI, that is the interest rates. Now in the market, owing to the competition, many of the public sector banks, private sector banks, the NBFCs have came up with a very good product which can be very beneficial for the students. So probably talking about the just the interest rates right now, there are two major part which the interest rates are giving to the students. One is the fixed rate of interest and the other one is the floating rate of interest. Let's quickly go through what are the difference between the fixed rate of interest and the floating rate of interest. So fixed rate of interest is something which is not going to change for the complete duration of your loan period. It is going to be the same for the complete duration. For example, if your course duration is 2 years and the loan period what you have availed from the bank, a public sector bank or a private sector NBFC, is 10 years, so your rate of interest is not going to change for the 10 years. It is going to be the same for the 10 years. This term is called as fixed rate of interest. Whether there are changes in the market scenario, whether there are changes in the software, where there are changes in the RBI guidelines, the rate of interest for the student, if he is availing a fixed rate of interest, is not going to change for the complete tenure. So this is what is the fixed rate of interest. This is definitely for certain students find it very beneficial because owing to the market conditions, the fluctuations which are right now happening in the market, students are very confused whether they should go for a floating rate of interest or they should go for a fixed rate of interest, because as per the market conditions, so there's a sudden rise into the rate of interest, there's a sudden decline into the rate of interest, and probably some of them don't want to take a risk, so that is the reason they go ahead for a fixed rate of interest. So fixed rate of interest, as I told, will not be going to change for the complete duration of your loan amount. Talking about the floating rate of interest completely depends and varies as per the RBI guidelines. If there is certain changes in the software, there are certain changes in the repo rate, which according to the guidelines of RBI, which may change for the student loan duration even after availing the loan from a particular bank or NBFCs. They may start the rate of interest, for example, at 9%, but during a certain course of time, if there are certain changes in the market, the rate of interest may increase to other points, say 10%, 11%, or it may come down to 8% or 7% also. So the floating rate of interest completely depends upon the market scenario, the RBI guidelines, the software, and all the terms and conditions which are happening currently in the RBI guidelines. So that is the floating rate of interest, which is not going to change. Talking about the rate of interest, there are three major sectors which are giving education loan right now in the industry. One is the public sector banks, which we call as the government banks. If this includes, for example, State Bank of India, Union Bank of India, Punjab National Bank, multiple banks are there which have started with a very good offers for education loan. If you compare other banks as compared to government banks, definitely the rate of interest would be lesser as compared to the other private sector banks or NBFCs. Certain government sectors only provide secured loans, certain provide secured or unsecured, or certain provide unsecured loan to a particular amount. But in that scenario, if you're probably opting for a secured loan of options, then the rate of interest is comparatively lesser as compared to the unsecured loans. And if you're going for unsecured loans, there might be a slight higher rate of interest which you may avail into the education loan industry. Okay, so this is something which is for the public sector banks. If you're talking about private sector banks, definitely one benefit herein you can avail is you can get a rate of interest comparatively higher to the public sector banks, but yes, you can avail a education loan without a collateral. Okay, probably it may vary to certain amount, depends upon the bank which you're opting for the education loan. Here the rate of interest right now in the private sector bank is between the range of 10.5 to 11.5% for unsecured loan option. But if you're probably looking for an unsecured loan options, it may be, as I told you, a little higher by, that is 11 to 13.5 or 14%. Again, depends upon the bank you're opting for. Okay. Again, the third major part, which is in playing a very important role in the market right now, are the NBFCs. We have HDFC Credila, we have Avance, we have Incred, we have Auxilo. Multiple options are available in the market. There, the slight rate of interest is definitely on a higher side, which definitely is going to be lesser if you're going for a secured loans, that is around 10.5 to 11.5. And if you're going for an unsecured loan options, it is going to be a range of 11 to 14%. Again, all these NBFCs, private banks, public sector banks, completely has a floating rate of interest, fixed rate of interest, depends upon the bank which you're opting for the education loan. Certain public sector banks do provide floating rate of interest, but are not opting for fixed rate of interest right now. And in the market, a very important startup has been done by the international NBFCs, which is probably Prodigy, which is Empower, which is Earnest, Discover, Salime. Therein, the rate of interest is very lesser as compared to what the Indian sector banks are giving, which may hardly start from 3%, 4%, but they have a certain different conditions, which probably every student is not possible to get it fulfilled. So they usually look out for a green card holder as a co-signer, or they are looking for a person who is settled abroad and has a abroad citizenship. Varies according to the company, but probably they are looking for a co-signer who are based out abroad, have a green card holder or a citizenship of that country. That person has to come into the loan structure to support your education, to play a co-applicant for you in the loan structure or a guarantor, and then probably you get an eligibility to apply for such kind of loans, wherein definitely the rate of interest are very beneficiary, that is around 3%, 4%. But again, this affects definitely the CIBIL score, the CIBIL history of the co-applicant, whether they pay certain interest rate on your behalf or they don't pay. As far as they are coming into the loan structure as a guarantor for you, they are going to be their CIBIL is going to be reflected with the education loan inquiry for your part. So this is about the rate of interest in the public, private NBFCs and the international lenders. Okay,
That,
so
that
you can choose. Yes,
Uh,
sorry.
Oh, no, no, that was really insightful, Komal.
Thank
Um, yeah, yeah. While we understand interest rates, but I think you've explained it really well, with all the details possible, for us to understand how do we go about it, what should we expect, or look forward to when we're looking for a loan, study abroad loan. So yeah, that really helps. Uh,
Correct.
yeah, moving ahead would also, as a student, I would actually want some time before I start a job and after I've completed my course, before I start, the repayment of my loans. So I think it would be really important for our students today to understand what is moratorium period.
Correct. Yes, Latika, because what I've seen, into certain years of experience into education loan industry, students are not aware, they just know what is fixed rate of interest, what is
Mm,
floating rate of interest, but how that is going to affect their repayment structure is definitely something very crucial which student needs to understand, because that definitely plays a very crucial role once they start the repayment of the loan part.
absolutely. Yeah.
Yeah. So yes, definitely we'll come to the repayment part. So in repayment moratorium, yes, a very important part for the students right now, because what I've seen into my career is student right now definitely are going for opting for education loan, but at the same point of time, Latika, don't want to bother their parents, they don't want to bother their
Mm,
siblings
mm,
to take a load of that education loan, to make them give them a burden of that education loan part. They
right.
definitely want to take it on their own shoulders and make the repayment. So in that scenario, moratorium is the best option for such kind of students who don't want to take a burden of their family or get this help and definitely take an education loan part completely onto their shoulders. So for them, moratorium is the best option. I will just quickly explain you what the term moratorium exactly means. Okay,
Right.
so moratorium students, very important, very important. Moratorium is a period wherein that is your course period, and certain banks give you 6 months, certain banks gives you 1 year. That 6 months or 1 year is called as a grace period. Okay, so for example, if you're opting for an MBA, you're opting for a master's, and typically this course duration is of 2 years. Okay, so 2 years plus 6 months or 1 year, depending upon the bank which you're going for, you will get approximately 3 years post that, which you can after that you can start your repayment structure. So this 3 years will be a moratorium period wherein you have to pay nothing to the company, to the bank, to the NBFCs during this moratorium period. You can completely start the repayment of your loan once you have completed your education. Post that, the company, the bank will give you 6 months or 1 year as a grace period to find out the job, to get settled down, to make you stable, to start your repayment structure. That grace period is very crucial for the student. Definitely some banks do give the grace period and the moratorium period only for 2 year courses, but now owing to the competition, many public sector banks, many NBFCs have came with a moratorium period for the complete 4 year duration, also for the undergrad students, also for the MBBS students, also for each and every course duration, for the CPL courses, each and every courses, the public sector banks and certain NBFCs are giving you moratorium period. So it for that, for example, it will be for your going for an undergraduate course, it is a 4 year course. So your moratorium will be 4 years plus 1 year or 4 years plus 6 months. Post that you can start the prepayment of the loan. So this is what is a moratorium period. Definitely moratorium period will be a bit expensive. I will explain you how, but before going to that point, moratorium will be definitely for the students whose maybe the conditions is probably the parents are retired, okay, but they have a high aspiration to go to the abroad part. So in that scenario, the student may opt for moratorium period, or for XYZ reason there's some medical terms and conditions, the financial part, definitely, so the parents are not capable to make the repayment during the course period. In that scenario, the moratorium period, the repayment structure of such kind of options is very beneficial for the student.
Okay, okay. Hi, Komal.
But I hope I'm audible.
Yes, you are now. You are now.
Yeah, okay.
Yes. Komal, so my understanding actually was, and I'm opening the forum for questions from our students, of course. But before we get
Mm-hmm.
questions from our students, so my understanding was moratorium period is to be availed by everyone, irrespective of the course that they are going for, because it gives me the time to actually look for jobs if I haven't got a placement, probably if I'm in the US or UK, Canada, wherever I am. And it just helps me. I mean, it's just giving me a cooling period so that once I'm done with my college, I look for a job and then I start the repayment. So is that not true
Correct.
for every student going for whatever course possible? Does every
Yes,
student,
yes.
okay, okay, I'm just trying to understand if every student happens to avail moratorium, or it is not a good idea to actually avail the moratorium period.
Yes, so that is something, as I told you, that they completely depends upon the student requirement. Okay, if he or his family is capable to pay the interest amount or say the EMI during the course period, I would always prefer student to go for that
Okay.
option. Okay, because that is definitely lesser expensive as compared to the moratorium period. Okay, I will definitely come to that point. I will explain you in detail how that varies, but definitely if the student is capable to pay interest amount or EMI during the course period, my first preference for the student and suggestion would be going for the same loan option, and the
Understood.
second option should be the moratorium period. I will explain you how. Okay,
Okay.
so now first, moratorium, what is full moratorium? I have completely made students understood that that you have to pay nothing during the course period. Okay,
Okay. Yes.
now in what happens is, moratorium is in certain banks, there are two kind of moratorium again which banks are providing. Certain give you accumulates your rate of interest for the course duration, okay, and that gets added into the principal amount, and they end up paying, like for example, that you taken a loan of 10 lakh rupees, the duration and the rate of interest accumulates for the 2 years plus 1 year of a grace period, which comes down, for example, say 1 lakh rupees. So once they will start paying the EMI, they have to pay the EMI onto 11 lakh rupees. 10 lakh was their main principal amount, and 1 lakh of the rate of interest what got accumulated. So that gets compound rate of interest, and they have to end up paying the EMI on 11 lakh rupees.
Okay.
Definitely now, owing to the competition, certain public sector banks have came up with an option where they don't compound rate of interest. Okay, what they will do is they will just take 10 lakh rupees of the principal amount. Okay, and the 1 lakh of interest will just be adjusted into the EMI loan structure, that will not be accumulated into the principal amount. Paying on 10
Okay.
lakh rupees only, and 1 lakh they can adjust into the EMI pay and make it into the installment payment.
Okay.
Okay, so there are two types of moratorium which the banks are paying right now.
Understood. Understood.
Yes. Okay. Now talking about the partial rate of interest, if the student is definitely not able to make the complete EMI during the course period. Okay, I am pretty much sure all the students must be aware, but just let me give an idea what is EMI. EMI is a equated monthly installment, which includes your principal amount also and interest amount also.
Okay.
Okay, if you are directly paying the EMI, then there's no point talking about the moratorium because you are directly giving the principal amount also and the interest amount also.
Right.
In that scenario, the you will definitely keep on lessening your burden for the future part, because you're paying your principal amount also right from that part of disbursement, and you're paying the interest amount also. But certain
Right.
students may offer a certain partial amount. They may not be capable of paying the complete amount, but they are okay to pay certain amount. So in that scenario, the student can go for a paying simple rate of interest during the course period. So what is that? They are just paying the interest amount during the course period. They're not paying the principal amount. They are just paying the interest amount during the course period. And once the course is completed, they will find
Hmm.
out the job, they will get settled down, and then they directly start paying the EMI. So
Got it.
there are three options probably in the repayment. One is the moratorium, wherein you have to pay nothing during the course period. One is paying the simple rate of interest, wherein you just need to pay interest amount during your course period. And what is the full interest? That is the EMI, your principal amount plus your interest amount.
Got it. Got it. Okay. This was again really, really
Yes,
informative. Also helping me understand our students' journey better. Moving ahead, uh, now let's just move
yes,
on to how the repayment works. What are the, best practices for the same?
correct. Okay, so let's coming about the repayment structure. Usually, what bank gives you a tenure is around 10 years or 15 years maximum. Okay, you have to complete the repayment structure of your education loan within a time span of 10 years or 15 years, which is the maximum what any public sector bank, private sector bank, or any NBFC is going to give you. So in that scenario, there are multiple things which have came up right now, wherein at any point of time, for example, your course is completed, you got a better job, and you have secured certain bonuses, you have certain incentives. At that point of time, you can pay that bonus, you can pay that incentive, or you can pay a lump sum amount to the bank to make a partial payment close for that loan part. That will reduce your burden of EMI, that will reduce your burden of other interest rate, that will reduce your burden of the repayment structure. So in that scenario, you can definitely make a certain amount at any point of time, and any of the bank or NBFCs 99% are not charging any penalty charges for that. Even in certain cases, probably there is certain way you may get money and you can close the complete loan amount. In that case, you can definitely close the loan also, you can foreclose the loan, and you don't have to pay the penalty charges for that. Within 1 year, 2 year, 4 year span of time, you can foreclose the loan, and you don't have to pay any penalty charges for that. You whatever amount you have utilized for the certain duration, for that duration you have to pay your rate of interest, and you can the foreclose your loan. So definitely that is one of the very beneficial part the student can offer any point of time in their whole education loan tenure. Okay, now the study the moratorium completely, if you which loan option, which repayment option the student has to go for is completely their choice. Depends upon their family background, depends upon their convenience, how which loan repayment option is more convenient for you. But as I told, the most beneficial, if you talk about term wise in the money part, will be your EMI option, second will be your interest rate option, and the third will be your moratorium option. Okay, moratorium option is one of the very crucial part, wherein the parents are into farming, where the parents are retired, where the parents are at the age of retirement. This student definitely should offer a moratorium period, because in that case the scenario increases for their chances to be eligible for the education loan. Because in education loan, definitely the co-applicant salary, the co-applicant profile, each and everything is taken into consideration by the banks and the NBFCs. So in that scenario, if the student is very much firm that he wants to go for a moratorium period, so this is the best part they can go ahead for. Okay, so after the moratorium period, definitely the EMI starts directly, because there is no scope of paying any interest amount. You have to definitely start paying the EMI. But again, this is eligible. The students are eligible who are going for moratorium period can also make a payment of partial part or for foreclosing. After the course duration, within 4 or 5 years, they can foreclose the loan. Yes.
Within 4 to 5 years, I mean, that's a dream, I think, because
Yeah,
it's
true,
such a
true.
loan, such a big loan that students are taking for studying abroad. So yeah, this would be like actually a great relief.
Definitely, definitely.
Uh, right. So just trying to do the math here, if a student happens to borrow
Hmm.
30 lakhs at such an interest rate, so if you can take us through the payment plan, how does it look like? What can be the expectation?
Hmm.
Exactly. Yeah.
Yeah, definitely. So if very good example, if is it's here, like for the student who is going for a 30 lakhs of loan, okay, he is getting a rate of interest of 11.5 and he has opted for a tenure of 10 years. Let's go through the three of the repayment structure.
Hmm.
Okay, if you're talking about the EMI part, if is directly paying the EMI. One thing very important student need to understand is if they are taking a total loan of 30 lakh rupees, 99% of the students are not going to take a disbursement of 30 lakhs into one shot. They will
Oh,
definitely take into installment as and when whatever is the requirement of the university. Because
acha.
for the duration of 2 years, they will first pay the fees for the first year, then they will go for the second year. And definitely the student should opt for a disbursement as and when the university is required, because for example the university only requires 10 lakh 15 lakh rupees, so the bank has to charge the rate of interest, the EMI, only on the disbursed amount and not on the complete amount of 30 lakh rupees. Okay. Yeah, so the student can take for 10 lakh rupees, and make sure your EMI and your interest rate is calculated for the 10 lakh rupees only. As and when whatever amount of disbursement they will be taking, the rate of interest and the EMI will be charged only on the disbursed amount. It
Hmm.
may certainly happen, Latika, in certain cases that the student take a loan of 30 lakhs, for example, but
Hmm.
at the end he takes a disbursement of only 20 lakh rupees because probably on campus jobs are there, stipend is there, certain requirements are there, and student arranges their funds. So it is not anywhere compulsory that the student has taken a sanction of 30 lakhs, he has to take a disbursement of
Hmm.
30 lakhs. As
Understood.
and when whatever is the requirement of the university or the student requirement, they can take the disbursement of that amount. Okay, but definitely they will end up paying on the disbursed amount only. So for example, the EMI starts a 6 months post study. Okay,
Hmm. Hmm.
now this is something which is called as moratorium, definitely. So the 30 lakhs disbursement is completely happened for the course duration of 2 years. They are being given 6 months as a grace period. So 30 lakhs is their principal amount, 11.5 is their rate of interest. So on 30 lakhs, 11.5% will be certain rate of interest which will be accumulated, and that will be added into their 30 lakh rupees, and they will end up paying the EMI on that complete amount, which will be approximately on the range of 48, 49, or 50,000 rupees,
Hmm.
depends upon the market conditions or the loan amount whatever they have taken a disbursement of.
Right.
Okay, so as I told you, if you're accumulating the rate of interest in the principal amount, definitely you will be end up paying more.
No.
So this comes to a calculation of they will end up paying, if they're taking a loan of 30, they will end up paying around 40, 50, or
Hmm.
55 lakh rupees, which is definitely going to be a expensive part. But definitely if they don't have any option, they have to go for this because they have to fulfill their educational loan dreams.
Got
So
it.
this is how it works. It completely varies the amount on the repayment part which the student is going for.
Got it, got it. And yeah, this was actually an important information that even if a loan is sanctioned for an amount like 30 lakhs, but if I've utilized only 20 lakhs, then I don't really, I mean, it's so personalized, it's customized based on
Yeah.
the students' needs and requirements. It's wonderful what NBFCs and banks are doing these days.
Correct. Because many students are into that question that I have taken 10 lakh rupees, I have to take a disbursement of 10 lakh rupees. No, this is wrong. You can take the disbursement of whatever amount you are required.
Great,
Yes.
great. Yeah, surely designed to help the students. Absolutely. So,
Yes.
moving ahead, there are a few mistakes that all of us as students, as customers, surely do. That we skip quite important parts in our of the process, right?
Very true.
Just because it sounds technical to us, so I think you can help us understand ki what are these mistakes to avoid.
Correct, correct.
Yeah.
See, when I was very young, I was studying. Definitely, if anyone is going to give me 4 or 5 pages of book, I will be like, okay, I have gone through it. I don't want to read it.
Right.
That's a human nature. I completely understand. But if you are going for an education loan, if you're going for any sort of loan in your future, Yes, loan agreement is going to be very crucial. Make sure whatever terms and conditions over a call, over email you have discussed with the finance company has to be recorded into the loan agreement. Take 2 days of time, take 3 days of time. It's completely for your betterment. So go through each and every detail. If the bank is asking you to make it on a hurry, no, it is your future perspective. It is someone you have to make a repayment for. So make sure, take time, but go through the each and every details. If there's anything which you find it missing in the loan agreement, talk to the bank and get it recorded onto the document. If they're not recording, get it a email over, get it an official email on that part. If they're
Hmm.
telling that this certain amount is going to be reimbursed, make it get it recorded onto the agreement or get it recorded over an email. So definitely it's going to take time, take 2 days time, 3 days time, but make sure each and every document or regarding to the loan has to be gone through the student.
Thoroughly.
Okay,
Yeah.
each and everything has to be the discuss has to be recorded as per the discussion whatever you have done with the bank.
Hmm.
Okay, in that scenario, if you have to make certain changes in the agreement and that is completely as per the legal terms, there will be no bank or NBFCs which will be against it, and they will be happy to help you for such parts. Okay, so make sure you read the complete part and understand that if there's any confusion, talk to your managers who is handling your education loan requirement and get it sorted with them.
Hmm. Hmm. Hmm.
Okay. Okay, so now if you're applying for an education loan, definitely the first and very primary part which any NBFCs or bank going to do is check your CIBIL part. Okay,
Hmm.
if there's a certain issues also, probably it happens that there was certain overdue because of the technical glitch or certain thing which was not done intentionally, but that has affected your CIBIL score. Okay, you can anytime opt for a NOC from the bank, and
Hmm.
if you have certain issues into the CIBIL, but you have a clear NOC for that, 99% of the banks are going to take that NOC into consideration and help you to fulfill your education loan requirement.
Hmm.
Okay, so that is something definitely you should take into consideration. If any CIBIL issue is there, but you have a definitely a proper justification for that, go ahead and submit to the bank. Major of the banks will understand that and help you to fulfill your education loan requirement. But
Hmm.
any loan inquiry, any education loan inquiry will definitely give you an question onto your CIBIL that you are making an inquiry or education loan onto your CIBIL also, your co-applicant CIBIL also, and your guarantor CIBIL also. But that will be reflected only as an inquiry and not as an education loan taken. So that
Okay.
is something which can be taken into consideration by each and every bank and NBFCs.
Okay.
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 Yeah, now why one very important, you choose a lender just because your cousin used them in 2021. Okay, no, very wrong term, very wrong term. My sister has taken a loan from XYZ bank. She has got a rate of interest 11%, but now I have an option of a bank which is ready to give me a rate of interest of 10%, which is going to give me a nil processing fee, which is going to give me a better repayment option. Then I should go for not with that bank, not for the bank which my sister has opted for.
Right.
Because you should definitely take into consideration which is going to give you a good deal in terms of repayment, interest rate, loan amount, whatever XYZ things you are taken into consideration, not just because your family is telling or your family has taken a loan from that. No, don't do that. Explore all the options. There are multiple options. Explore all the options, whichever is going to give you a good deal. Go ahead for the education loan with that bank or that NBFCs. Take an advantage of the multiple loan options which are available right now into the bank.
Hmm.
Okay, your civil score is lower than Pakistan's score in the Champions Cricket. Okay, wow, very nice example. Okay, so yes, civil score is definitely going to be a very very crucial part. Okay, a certain mismatch in the civil, a certain low part on the civil, definitely bank will not take a risk with it as far as you have a proper justification for it. In that scenario, definitely. Many of the chances are many of the NBFCs and banks will not take a chance to go ahead and proceed for the education loan part. But in that scenario, certain relaxation is you can take certain such people from the family into the loan structure who has a good CIBIL, who are okay to come into the loan structure to support your education. Okay, now definitely parents are very important to come into the loan structure for supporting your education, either in the part of co-applicant or at least a guarantor. Okay, but yes, if there's a certain challenge on the CIBIL part, make sure you are taking certain other member who is ready to come into the loan structure for your supporting your education. Nowadays, the CIBIL score has to be more than at least 650 to 690. Below that, definitely bank is not going to take that application into consideration for the education loan part. So make sure in future also, if you're planning to take an education loan, try as much as you can keep your CIBIL history clean. Okay, no default, no delay, nothing. That is going to help you for the future part. Okay, you pick the lowest EMI without realizing it's a 15-year repayment plan. Okay, now certain students are there who have a burden of family also, who have a burden of the education loan also, who have certain other responsibilities also. So what they do is, in that scenario, they divide they have certain calculations. I will pay this much amount for the EMI only. I will pay this much for my household expenses, and this is for the certain XYZ reasons. Okay, so in that scenario, if you have a clear picture that I'm going to go for a 10 years of repayment ताकि मैं महीने में सिर्फ 10,000 ही मेरे education पे expense कर सकूं, make sure you have certain calculations very clear into your loan, into your mind about the loan part. Okay, you have to be very clear which loan option, which repayment option you are going ahead with, so that you, according to that, you can make the tenure, discuss with the bank. Any point of time you can increase your tenure, you can decrease your tenor, but this is something you have to take an intimation and give the intimation to the bank. So make sure you're clear about your repayment plan, which repayment option you have to go ahead for. Okay, your KYCs. I have been facing this issue since I have started my education loan career. There are many things. There is a mismatch into the name of their KYCs. ठीक है, किसी में नाम अलग रहेगा, किसी में सरनेम अलग रहेगा. There are certain changes. There are सरनेम पहले रहेगा, नाम बाद में रहेगा. Banks are very particular about your KYCs, very particular KYCs, and it hardly take 24 hours or hardly take around 15 days to make your KYCs on a same page. So make sure your KYCs is your Aadhaar card, your PAN card, your passport. All those things has to be the name, the address, very similar. No changes, nothing, no mistakes on the spelling part. So make sure KYCs are very clear. Share it on WhatsApp with your bank manager, your branch manager, who is handling your case, and make sure you're on a right track so that आपको
Right.
last moment पे ये चीज है, it should not affect your loan process. Okay, so
Right.
make sure about that part.
Hmm.
Okay, and guys, you have plenty of time when you start thinking about an education loan. Utilize that time to apply for an education loan. Don't go for a hurry कि हम लोग अभी मेरा I-20 आएगा and then I'll apply for an education loan. No, please don't do that. If you're thinking of planning abroad, if you're thinking of planning in India, which is going to cost you more than 20 lakh, 30 lakh, make a prior preparation and arrangement for your education loan. Don't make for the last minute.
Hastily.
Okay,
Yes. Yes.
very
Absolutely.
important. Yes, yes.
Yes. Yes.
Very, yes,
So
sorry.
yeah, we've actually also been facing this issue where the customers are comfortable communicating over WhatsApp,
Right.
and it just gets really confusing even for the loan counselors to help the customers, and
True.
of course it affects the customer's journey as well. So yeah, a great list of things that we should avoid doing. Before just moving ahead and before discussing if there are any tips to save on repayment, like you've already actually discussed, a lot of it
Hmm.
depends on the type of repayment option that we choose for ourselves. But before we move ahead to that, I'll just take like a few questions from our customers.
Definitely.
Nisha Jain is asking, are moratoriums available for all types of loans or just specific ones?
Yeah. Yes, I rightly said many of the banks are giving moratorium for each and every course and each and every type of education loans. No worries, your course duration is 2 years or 4 years or 5 years. Okay. There are multiple banks like Punjab National Bank is there. Many other banks are also there who is going to give you moratorium for the complete duration of your course period. Along with that, they will also give you 6 months to 1 year as a grace period. So definitely take an advantage of that if you're looking for a moratorium period, and you can choose certain such banks for your education loan requirement.
Got it. Do the choice also affect the moratorium period? Asking this only because in the past webinars also we have actually been receiving a lot of questions from our students going for say MBBS in the countries, right?
Yeah.
So what happens is it is a longer course than a master's course. So what is it about the MBBS courses that people are going for, or maybe a masters in MS?
And
Yeah.
yes. Yeah, yeah. For MBBS also now the banks have come up with the moratorium period. Okay, because MBBS is such course which probably students offer post their 12th standard only, their HSC only. So in that scenario, student find it very difficult to make the repayment immediately. Also, it is a huge duration course, 5 years or 4 year course. Again, the cost of
Along
education
with the
is,
MD. Yeah.
Correct, correct. Along with that, they definitely go for MD also, which adds up 2 year more into their course duration. Along with that, the cost of education is very high, Latika. It
Hmm.
approximately costs more than 1 year also if they are planning for certain good institute. So it was going to be more than a CR. In that scenario, also yes, the banks have come up with certain options wherein you can go for a moratorium period. Also for MBBS, also MD, also, or a duration which is more than 4 to 5 years also. Yes, you can definitely explore those options.
Understood, understood. And one more question. What's the best strategy to reduce the loan tenure without increasing EMI too much? So we've actually discussed the same, Nitesh, but thank you for asking.
Yes, yes, yeah. So yes, definitely, if you want to reduce your tenure, but you're not comfortable for higher amount of EMI also, I will definitely suggest major of the banks give you an option of margin money, which 15% 20%. As far as you can arrange it on your own, try to use that amount first and then go ahead for the education loan part, or vice versa. Is definitely your choice. In that scenario, make sure that jitna amount आपको required है, you can do it. Try to get that amount only from the bank, which will definitely reduce your EMI options. Or also, once your course is started, try for certain part-time jobs which is very easily available right now into the campuses, or certain stipend which you can help reduce your EMI. अगर आपको वैसे ही मैंने जैसे बताया, you have certain bonuses, incentives, try to make certain payments to the bank in lump sum so that you can reduce your EMI. That will definitely make your burden lessen in the future.
Right, right. So, just, I mean, the last thing would be to quickly just go through all the tips,
Yes.
some that you have already mentioned. If there's anything more than that, that can help students save on repayment.
Yes, just repayment, students, make sure you opt for a very convenient repayment option, whichever you find is going to be suitable for you, your family members. Think very wisely. You have plenty of time. You take approximately year to get the preparation done for your course. So utilize certain amount of time for understanding your loan requirement, understanding your loan structure, understand which repayment option you want to go ahead for, and which is going to be suitable for you. According to that only you take a call. Definitely, if you don't have any option, go for moratorium. But at any point of time, if you feel you're okay to make the EMI payment, you're okay to make the simple rate of interest payment during the course duration, definitely go for that. My always preference will be, first option will be make your EMI, then the interest rate, and then the moratorium, because definitely money plays a very crucial part. Think according to that. Definitely, it completely depends upon your requirement and your understanding with your family how you want to proceed further for the repayment. But if you're opting for these options, go on the sequence which I've shared with you.
Right. This has been an extremely powerful webinar of ours, Komal. I mean, I can't thank you enough because I actually also got some clarity regarding the same. So yeah, I think it will help me guide our students better. And of course, you are there to, show us the way. So thank you so much, Komal, and thank you all the students, for being a part of today's session. We hope this helped you get a clearer understanding of interest rates, moratorium periods, repayment structures, and how all of this directly impacts your education loan and your future finances. Remember, the right loan is not just about, the amount. It's about the terms, the timing, and the long-term impact. So that's exactly where Lorien Finance comes in. We are here to help you make an informed, confident decision without stress or confusion. And if you still have questions or want to explore your personalized loan options, feel free to reach out to us directly after the webinar. You can reply to us on the WhatsApp message that you have received. You can also go to our website, fill the form. It's a very short form where you just have to fill your very basic most details, and our team will always be happy to assist you one on one. And also, do not forget about the biggest study abroad loan fest, because we have, apart from all the expert guidance that we are providing, we're also helping students with rewards such as, a MacBook, an iPhone, travel kits. And that's all because we know how this journey can be taxing and costly. So we have actually come up with rewards that will probably help you, in some small way, uh, reduce the cost of your journey. and we would also want to make this experience a fun and a happy one. Hence, do not forget to apply for a loan before the before June end, so that we can help you with all of these wonderful rewards. So we'll be sending you an email, WhatsApp messages, so you can always book your free loan consultation also by just sending us a WhatsApp message. So thank you again for joining us. All the best with your study abroad journey, and we hope to be a part of it. Thank you
Thank you so much,
again.
Latika. Thank you, Lorien team, for inviting me. And it was a great session. And I wish you all the best. And I also suggest students for any such education loan inquiries, you have Lorien who can help you with all the multiple banks and NBFCs available in the market. So definitely take an advantage of that.
Yes, yes.
Thank
Thank
you.
you. That was helpful, Komal.
Thank you. Bye.
Bye.